What's up guys, Jeremy here and welcome back to my channel. So in today's video, it's kind of late, it's actually a month late because it's almost February, but screw it, we're gonna make it anyway. We're gonna talk about my predictions for 2022. I do this every year and usually I'm correct for the most part, but we're gonna talk about real estate, the demand for it, interest rates, crypto, and all that good stuff. Wow. If you're new here, what's up? My name is Jeremy Mateo. I'm a real estate investor here in Hawaii, and I make YouTube videos about real estate and making money. I like to make these videos because if I end up being right, I look like a total genius, and if I'm wrong, then I just never bring this up again and we pretend that I never made these videos. But anyway, before we get started, all I ask is that you please smash the like button and subscribe to my channel. And while you're at it, go ahead and follow me on all my other social media platforms as well. All right, thanks. So since I'm a real estate guy, let's start with real estate, specifically interest rates. We all know that the Federal Reserve stated that they're going to raise interest rates in 2022. When they first announced that, a lot of people started freaking out because once people hear that interest rates are going to rise, they think that the market is going to crash. Is that going to happen? No. I will say that we are already starting to see interest rates slowly go up. Should we be afraid? No. But the reason why it's still high, because even though the interest rates are going to rise, they're only going to rise by just a little. Even then, it's still going to be really good interest rates. If we look at this graph right here, you have to keep in mind that if we backtrack to around 2013 to before the pandemic, when things were normal, interest rates were about sub 4 to 4.5%. So even at that point, interest rates were the lowest they've ever been historically. So when the Federal Reserve dropped them and interest rates were at 2.5% during the pandemic, that's when everybody went crazy and you saw a feeding frenzy of buyers hit the market trying to buy anything and everything. Now, to present times, they're about 3% or so. And even then, that is still the lowest they've ever been compared to pre-COVID times. I think that if the Fed raises the interest rates, we're going to see a slight decrease in home buying and a lot of negative feedback, maybe causing a mini decline, not a crash, nothing catastrophic. Because of that, I'm going to go out on a limb here and say that the Feds are going to respond to that negative feedback by lowering the interest rates again. I've spoken to my mentor, Ryan Pineda, and he doesn't think the interest rates are going to rise. And in one of his YouTube videos, he's actually speaking to Grant Cardone. In that video, he has a bet with Grant Cardone, and Grant is saying that nothing crazy is going to happen with interest rates. We'll see. And I shit you not, as I'm filming this today on January 26th, I'm looking on the internet everywhere and they just announced that the Fed will not be increasing interest rates. I don't know if you can see that. So it looks like we're off to a good start for 2022. Wow. Think about it. The government needs people to keep borrowing money in order to operate due to our economic situation. So they have no choice but not to mess with interest rates. If they raise interest rates, people will stop borrowing. So despite rising interest rates, if and when they do rise, they will still ultimately be the lowest they've ever been. And there's still going to be a lot of demand for real estate. And that is my second prediction. Demand for real estate will still be insane. This is what I think is going to happen. It's still January, so real estate is still relatively slow compared to other seasons. But when you look at this slow, it's really like the normal times of being fast pre-COVID. I'm gonna pull up some Hawaii real estate data taken from the MLS. So if you look here, average days on market in Hawaii went from 11 days to 13 days. So it slowed down. Oh my gosh, we're heading for a crash. I'm just kidding, okay, there's no crash. On average of 13 days on the market is still incredibly fast, stupid fast. Going from 11 days to 13 days is like going from 120 miles per hour to 110 miles per hour. It's still fast. In pre-COVID times, if your house sold in 1 month, that was considered fast, at least for Hawaii's market. So is demand still going to remain insanely high despite the increase in interest rates in 2022? Absolutely yes, without a doubt. The reason is that interest rates determine the demand for real estate. Again, referring back to earlier in this video, if you look at the interest rates, they might be rising to 3.5% or maybe a little more. But even then, again, that is still historically low when you look back at the history of interest rates. As for Hawaii's market, Absolutely. Hawaii is a unique market. Hawaii is a global market, and all of the buyers here are local, mainland, and even international. So I am confident that real estate demand will remain the same, if not get higher in 2022. Next prediction is real estate prices. I believe 2022 is going to be just like 2021. With simple economics, you have a low supply plus high demand means prices will go up. We still have a low supply because not many people want to sell their house due to all the hundreds of variants that keep coming out. Think about it. Because we are still in a pandemic, most people do not want to put their house on the market because they don't want random people coming into their home, possibly exposing them to COVID. The only people who will be selling are the people who have to sell. Well, what about the people that want to upgrade or downgrade? I think that those people who will sell in order to buy will buy if they don't mind buying something relatively expensive. We are in high times with high inflation. Everything is high right now. If they are selling high, good for them, but they are also going to be buying high. Some people don't want to do that. So, most of them will just hang on to their home. Again, if and when the interest rates rise, there will be a small slowdown or mini crash. When that happens, prices will not take a plunge. They will have a very small, insignificant dip, and then slowly after that, they'll start increasing again. All right, last prediction is crypto. You guys saw my first crypto video. Again, I am a complete noob. I've only been really paying attention to crypto since October. Everyone who I was studying about crypto, specifically Bitcoin, which dictates the price of all the other coins in crypto, all of them said that we were going to the moon and that we were going to hit $100,000 by 2022 in January. It did not happen. It actually went the opposite direction. What I learned from that is that no one really knows or can predict what crypto and Bitcoin is going to do. So I am just going to throw a wild prediction out there, and this prediction has zero math behind why I think this. I'm pretty much just pulling a number out of my ass and throwing it against the wall to see if it sticks. Two things could happen. Either we enter a bear market, which Bitcoin just fluctuates 10 to 20% of what it is right now, and judging by what it is right now, it's about $37,000 per Bitcoin, and it will stay like that for the next, 1 to 2, 3 years. Or if there ends up being a rally, I think Bitcoin is going to hit $100,000 in 2022. Again, no math behind this reasoning at all. I'm just pulling a number out of my ass. But I just think that more and more people are going to start investing in crypto due to the high inflation, and the government just, keeps printing money, and all of that money is going to flow into crypto because investors want to hedge against inflation. So there you have it, guys. Those are my predictions for 2022. If I end up being right, definitely expect me to post this later on this year so I end up looking like a genius. And if I end up being wrong, then, again, we'll just pretend I never made this video. So thanks again for watching. I'll see you next time.